We are going to focus on two key concepts in this session. The first one is capital expenditure versus revenue expenditure. The second concept is capital receipts versus revenue receipts. Now, what is the difference between these two? Let's start now. First one, we'll focus on capital expenditure. What is capital expenditure? The two key conditions are all those expenditure which gives us benefit for a longer period. Look at this point here, benefit for longer period. So if I spend on something that is going to give me benefit for longer period, it will be a capital expenditure. For example, purchasing of a machinery. If I purchase a machinery, this is an expenditure only, but this expenditure will give us benefit for multiple years. Hence, this will be called as a capital expenditure. And the second condition is it will help us to bring the asset to usable condition. I repeat, these expenditure will help us to bring the asset to usable condition. For example, installation of machinery. First, I purchased a machinery. Now I have to install it. Without installation, I won't be able to use the asset. So, the two key conditions which has to be satisfied for classifying it as a capital expenditures are: the one condition is it will give us benefit for longer period. The other condition is it will help us to bring the asset to usable condition. So if any of these two conditions are fulfilled, we'll be calling that expenditure as a capital expenditure. Now, the question is what I should do with this capital expenditure. So in financials, what I should do is this capital expenditure will be capitalized along with the cost of the asset. So what happens is if I purchase a machinery and if I spend some amount, let's say I'm spending 3,000 rupees for installation, this 3,000 will be added to cost of the machinery and it will not be charged as expenditure in our P&L. So capital expenditure will be directly taken into balance sheet. That's a concept here. Now let's look at this point once again. Expenditure which provides us benefit for longer period is capital expenditure, and these expenditures are incurred to bring the asset to usable condition. Expenditure like inauguration, promotion is a revenue expenditure as there is no future benefit from these expenditure. This is a potential topic. Now a question arises that okay, I have purchased let's say I have purchased a new building. For this new building, I am doing the inauguration. For this inauguration cost, can I add it to the cost of the building? A question arises. Now the answer is these type of expenditure cannot be capitalized. It has to be charged to P&L. Why? Because this inauguration expenditure doesn't is not going to give us some long-term benefits, or it is not going to help us to bring the asset to usable condition. Since these two conditions are not fulfilled, what we will do, inauguration cost, promotional expenditure, all these things will be charged to P&L. So the distinction is, the key point is, capital expenditure will be directly taken into balance sheet. It won't go into P&L. Revenue expenditure will be taken to P&L. Let's start now. So we'll move to the second point. It enhances the capacity of a business, helps in reducing the cost of the asset. So the what benefit we get here is by making these expenditure, it will either increase the capacity of the business. Suppose I'm purchasing a new machinery. What will happen? This new machinery will help us to boost my sales. It will help us to increase my production. If production goes up, it will lead to more amount of revenue as well as more amount of profit as well. So there will be some capacity expansion in the business. So these capital expenditure will help us to expand the capacity of the business. At the same time, it might help us to reduce the cost of the production. So the company's cost might come down. Written as cost of the asset, it should be cost of production, etc. See what happens is these types of expenditure, what it will do is it will help us to reduce our cost. So for example, let's go with the same machinery example. When I purchase a machinery, what happens? This machinery will help us to streamline my production process, to help us to increase the output at a fast pace. So what happens is I'll be able to cut down my labor cost. The cost of production might come down when you go for some automation. So these machines will help us to increase my production at a large scale. So that's what I'm trying to convey here. It enhances the capacity of the business. So the capital expenditure will enhance the capacity of the business, or it will help us to reduce the cost of production, etc. Then the capital expenditure what will be the impact in financials is it will either increase the asset or it will decrease the liability. It could be either of these two ways. For example, purchasing of a machinery is a capital expenditure. At the same time, repayment of a bank loan. When you pay off your bank loan, it's again is called as a capital expenditure because the money is moving out. When you purchase a machinery, money is moving out. When you repay your borrowings, again money is moving out. So these two will be called as a capital expenditure. So repayment of borrowings also is a capital expenditure only. So the financial impact will be the asset will increase or the liability will come down. Because in both the scenarios, the money is moving out of the business. Next one. Example, purchase of building, machinery, construction of a factory, etc. All these things will come under capital expenditure. Now let's focus on revenue expenditure. Now, what is this revenue expenditure all about? Revenue expenditure are those expenditure which are not of capital nature. A very simple example. So all those expenditure which is not of capital nature will be classified as revenue expenditure. Um, so what is the condition for classifying it as capital expenditure? Two conditions. One is it should give us some long-term benefit, or it should help us to bring the asset to usable condition. So our condition. So if these two conditions are not fulfilled, we'll be classifying that expenditure as a revenue expenditure. So in revenue expenditure, look at the points here. Expenditure which provides us benefit for current period is revenue expenditure. So there won't be any long-term benefits and will not be there. The expenditure will be incurred for the current financial year only. It will help us to maintain the earning capacity of the business. So business will be able to maintain its earning capacity. It will not able to it will not enhance your earning capacity. The earning capacity will remain same from a revenue expenditure. I'll give some examples for this. Let's speak of salary. By payment of salary, or even a simple example will be repair cost. For a machinery, if you're doing some repairs, by doing this repairs, the efficiency of the machine will not increase. So what it does, it will help us to maintain the asset at the existing level. So whatever is the present position, it will bring the asset back to its present position. So repair cost will be classified as a revenue expenditure and not as a capital expenditure. I hope it should be clear. So second point is it helps us to maintain the earning capacity of the business. No impact in balance sheet, that is assets or liability. So it will not impact your balance sheet. The impact will be there only in P&L. So it will affect the company's P&L. It will affect the current year's profits and loss. It will not affect your balance sheet position. Example, payment of salary, commission, rent, EB, etc. All these things will be classified as revenue expense because these has to be incurred every year. And one more point which you can add is generally these expenditures will be of recurring nature. Revenue expenditures will be of recurring nature. You can look at this example itself, salary, commission, EB, rent, all these things will be incurring year after year. So this is the concept of revenue expenditure. Based on these discussion, let's start. Let's look at some examples now. Let's take up this illustration. Look at this point. Overall expenses. First, the question is state with the reasons whether the following statements are true or false. So the question is overall expenses of second-hand machinery purchased are revenue expenditure. Now what they are saying here, we have purchased some second-hand machinery we have purchased, for which we are doing some overall expenditure is done. What is overall expenditure? It's nothing but we are overhauling cost is I'm making when I purchase a second-hand machine. Let's say I'm purchasing a second-hand car. What I will do first, I will take it to a mechanic shop. I will go for a overhauling. After then only I will be using the asset. So this overall expenditure for a second-hand machinery is a revenue expenditure or it's a capital expenditure. That's a question now. So what is the answer here? By doing this overall expenditure, you have to just focus on these 2 points. What are those? First one is whether the capacity of the asset will enhance or not. Look at this, the point we have discussed now. For capital expenditure, the benefits, what are the two key points? Benefit should be there for longer period. You must get some long-term benefit, and or it should help us to bring the asset to usable condition. If either of these two conditions are fulfilled, we'll be classifying it as a capital expenditure. Now, if you look at this question here, overall expenditure for second machinery. Without incurring this overall expenditure, will you be able to use the asset? Answer is no. So what happens? This statement is false. This will be called as a capital expenditure. I hope it's clear. Very simple. without doing the machine overhauling, we will not be able to use the asset. So this overhauling cost, which has been incurred to bring the asset to usable condition, hence this overhauling cost for second machine will be called as a capital expenditure. Simple one. Next, money spent to reduce working expenses is a revenue expenditure. What they are saying, money spent to, this is a keyword, reduce working expenses. So your day-to-day operational cost is going to come down. You're going to do some expenditure now. That expenditure will help us to reduce your day-to-day operational cost. So this type of expenditure is called as revenue expenditure. That's a question they are asking. So the answer is false here. The reason is you are getting one benefit. What is the benefit here? The working cost is going to come down now. Since the working cost is going to come down, this expenditure, whatever you have incurred, will be classified as a capital expenditure. As I told you, there are two key points. The first one is benefit should be there for longer period, or it will help us to bring the asset to usable condition. These are the core points. So we are getting some benefit here. What is the benefit we are getting here? It reduces the working expenditure of the business. So hence this type of expenditure will be called as capital expenditure. Next one, legal fees to acquire property is a capital expenditure. So I am paying some legal fees for acquisition of a property. Simple example is I would have paid the stamp duty. I would have paid the lawyer's fees will be there because registration has to be done. So all these types of legal fees will be called as capital expenditure. That's the question they are asking here. So what is the answer? Without incurring the legal expenditure, legal fees, will you be able to bring the asset to usable condition? Answer is no. We can't use the asset. To use the asset, the documentation has to be in our name. So for doing all this documentation, I am paying some legal fees. So legal fees is a capital expenditure or not? Answer is yes. Answer is true. So the third question, the answer is true because without incurring this expenditure, I will not be able to use the asset. Fourth one, amount spent as lawyer's fee to defer to defend a suit claiming that firm's factory site belonged to plaintiff land is capital expenditure. Now, what is the question they are asking here? We are paying some amount to a lawyer. So we have paid some amount to a lawyer here. So it's a lawyer's fee for what? Defending a suit claiming that firm's factory site belonged to the plaintiff. What is the meaning here? Who is called as a plaintiff? The one who has filed a case against us. See, what happens is someone has filed a case against us saying that the factory, they're asking that, they're saying that they filed a case against us saying that our factory belongs to them. So we have constructed a factory in their premises. That's a basic point here. So we are contesting this case for which I am paying a lawyer's fee. Now the question is the lawyer's fee, whatever I have paid, is called as a capital expenditure or is a revenue expenditure. That's the question they're asking here. I repeat, the question is someone has filed a case against us saying that we have built a factory in their premises. Plaintiff means the person who has filed a case against us, we will call them as plaintiff. So for contesting this case, I have appointed a lawyer and I'm paying fees for them. Now, this lawyer's fees is a capital or revenue expenditure. That's a question. Now, how to think about it? The same story. Is there any long-term benefit because of this lawyer's fee? Answer is no. I'm paying this fees just to defend my property. So already property is there in the property is there with me. I'm using that property. There is no enhanced benefit from this property. So there is no enhanced benefit by paying this expenditure by paying this lawyer's fee. I don't get any extra benefits, or there is no this expenditure doesn't help us to bring the asset to usable condition. Hence, what will happen? This expenditure will be classified as a revenue expenditure and it's not a capital expenditure. So the fourth question, the answer will be false because this is not going to enhance the efficiency of the asset, or there won't be any long-term benefits, or it won't help us to bring the asset to usable condition. Since these conditions are not fulfilled, we'll be classifying this as a revenue expenditure. I hope it should be clear. You have to remember this point. Already the factory is with us. So claiming that firm's factory means what? The factory is with us only. So we are having the factory, we are using the factory. Someone has filed a case against us claiming the ownership of this factory. So the lawyer's fees, what I pay here, is not going to help you in enhancing the asset's efficiency, or it is not going to help you to bring the asset to usable condition. Hence, this will be a revenue expenditure. Then, fifth question. Amount spent for replacement of worn out part of a machine is capital expenditure. What they are saying here, amount spent for replacement of worn out part is a capital expenditure. Some parts has been worn out. Now, what we're doing here, we are going to replace that part. So, all these replacement of worn out part, this is a key point, is going to be of what? Revenue expenditure only. See, this is something like a maintenance cost. I'm using an asset, the asset is not working now. I'm going to replace that some part of the asset so that I can use the asset as it is. So what happens for using the asset, they're going to replace the worn out part. This type of expenditure is like a maintenance cost. So what happens? This will be classified as a revenue expenditure. Same story. There is no enhanced benefit from this expenditure. The asset will come back to its original position only. Second point is, it is not going to help you to bring the asset to usable condition. So since these two conditions are not fulfilled, we'll be classifying this as a revenue expenditure. A question arises that for bringing the asset to usable condition, this replacement essential no. So why can't I classify it as a capital expenditure? Sometimes that kind of question might arise. See, the point is bringing the asset to usable condition. Now, what it means is the initial installation cost, all those expenditures. Suppose I'm paying a stamp duty for registering a property in my name. So these types of initial expenditure will be called as capital expenditure. But already the asset is in a usable condition. We have used the asset, so we are just replacing the part. Hence, this types of expenditure will be treated as a revenue expenditure. So the point is, the asset to usable condition, this point will be factored in at the initial stage only. When you're purchasing an asset or constructing an asset, if you're going to spend some amount so that the asset will be brought to usable condition, that is what we are referring to this point. But in this case, in this question, what is given to us is we are saying that we are going to replace a worn out part. So this will be classified as a revenue expenditure and not as a capital expenditure because it is as good as a maintenance cost. Next one. Expenses incurred on the repairs and whitewashing for the first time on purchase of a old building are revenue expenditure. What they are saying, they're incurring some repair cost as well as whitewashing for purchase of an old building. So we have purchased an old building. For this old building, we are incurring this repair cost as well as whitewashing. So apply the same provisions. Is there any enhanced benefit from this repairs and whitewashing? Whitewashing will help us to improve the life of the asset. See, the whitewashing, we are coloring the house and all, we are painting the house now. These paint and all, what happens is it will help you to protect the building. So some advantages are there with painting. So what happens is it enhances the asset's efficiency. So the wear and tear of the asset will come down because of this painting cost as well as whitewashing and all. And the other condition is to bring the asset to usable condition. These 2 points are getting fulfilled in this case. Say I purchased a old building. When I purchase a old building, initially I have to do some repair work. Without that, I will not be able to use the asset. Similarly, I'm going for a whitewashing. For what? Whitewashing helps us to protect the building. It will give us some benefit will be there. The wear and tear of the asset will come down because of whitewashing. So what happens? Since there are some benefits out of this, this will be called as a capital expenditure and not as a revenue expenditure. So for sixth question, the answer is it's a capital expenditure and not a revenue expenditure. The reason is for second-hand machinery or a building, the repair cost will be mandatory to use the asset. At the same time, whitewashing will help us to maintain the asset in a good condition. That is, the wear and tear of the asset will come down. So in that way, there's some benefit for us. Hence, this will be classified as a capital expenditure. Next one, expenses in connection with obtaining a license for running the cinema is a capital expenditure. The question is, we are incurring some expenditure expenses in connection with obtaining a license. So we have obtained a license for running a cinema. So this license cost is a capital expenditure. That's a question they're asking here. So they say apply the same provision. The two conditions are what? It should help us to bring the asset to usable condition. Second one is it will give us some long-term benefits. Now, without this license, what will happen? We will not be able to use the asset. In this case, to run the cinema hall, I need the licenses. Without these licenses, I will not be able to use the cinema hall. Hence, this license, what will happen, will be called as a capital expenditure. Hence, for seventh question, answer is true. Eighth one, amount spent for construction of temporary huts which were necessary for construction of cinema house and were demolished when the cinema house was ready is capital expenditure. What they are saying, amount spent for construction of temporary huts. So they are constructing a temporary huts here for what? Which are necessary for construction of cinema hall. So we are constructing a cinema hall. For the cinema hall, I am constructing a small huts and were demolished when the cinema house was ready. Once a building has been completed, we will remove this temporary huts. Now, whether this temporary huts is a capital expenditure, that's a question they're asking here. Now, the same story apply the two provisions. First condition is what? It helps to give us some future benefit should be there. So that point is getting fulfilled. Think here, without constructing the temporary huts, will we be able to construct the cinema hall? Answer is no. So I need these huts where the people can stay so that they'll be able to construct the cinema hall. So this construction of asset is mandatory, is required for getting the asset to a usable condition. So the benefit is there. What benefit? Only when people can stay, they'll be able to construct the building quickly. So I need a place for them. So construction of huts will help us to bring will give us some future benefits will be there because it will help us to complete the construction of cinema hall quickly. And the second condition is bring the asset to usable condition. Without these huts, where the people will stay, where the workers will stay, the construction workers has to stay. No, they need some place. So without these huts, if they can't stay now, how can they complete the building quickly? So what happens? This type of expenditure will be called as a capital expenditure. So I think with this kind of examples, this should be clear. Now we'll go for the next few more examples also we'll see now. Let's take up another case. State with reasons whether the following are capital or revenue expenditure. Now what is the first question? Expenses incurred in connection with obtaining a license for starting the factory for rupees 10,000. Now what is the question they're asking here? They're saying that I have paid 10,000 rupees in connection with obtaining a licenses for starting a factory. I'm starting a new factory for which I'm spending 10,000 rupees as a license. Now what happens? This is a capital or revenue. It has to be obviously a capital expenditure. So this is a because without this, I will not be able to bring the asset to usable condition. So for constructing, for running this um, for expense in connection with obtaining a license for starting a factory. For starting this factory, I need to pay this license fee, without which I can't run the factory. Hence, this 10,000 will be called as a capital expenditure. Next one, 1,000 paid for removal of inventory to a new site. So I am paying 1,000 rupees for moving the inventory to a new site. Now look at the provisions for capital expenditure. What is the What is the provision? It will give us some future benefit. What I'm doing here, I'm just moving inventory from a old place to a new place. So there is no future benefit because of this expenditure. The second condition is what? Bring the asset to usable condition. Does this 1,000 rupees help us to bring the asset to a usable condition? Answer is no. I'm just moving it to a new site only. So since these two conditions are not fulfilled, what happens? This cannot be called as a capital expenditure. Hence, it has to be a revenue expenditure. Next one, rings and pistons of an engine were changed at a cost of 5,000 to get fuel efficiency. This is a key point. Now, what happens here? We're getting some benefit here. So, the fuel efficiency, the asset is getting some, there's an enhancement of efficiency here. The fuel consumption is coming down. So, in that way, I'm saving some cost in the future. Some benefit is there. So, what happens? This 5,000 rupees will be classified as a capital expenditure. I repeat, since we're getting some benefit in the future, the payment of the rings and pistons of an engine has been changed, no? So this is going to be classified as a capital expenditure. Next one, money paid to MTNL, 8,000 for installing telephone in the office. So what happens is, I am paying some 8,000 rupees for installation of telecom equipments in my office. Now, this 8,000 is something like a security deposit. When you purchase a new connection, these things are not there in the present scenarios because we don't use all these landline and all. Now, all these types of advance payments is gone. But previously, what happened is when I get a new telephone connection, I have to keep some amount as security deposit. So this security deposit of 8,000 will be called as a capital expenditure or revenue expenditure. That's the question they're asking here. So look at the question once again. Money paid to MTNL for installing telephone in the office. So this 8,000 is kind of a security deposit. Now what happens? This 8,000 is not at all an expenditure. Now what is the entry we will pass for a security deposit? When I pay something as security deposit, it's going to be a refundable amount. I'll get back this amount in future. It's not an expenditure here. So it's neither capital nor revenue. I hope it's clear, I guess. See the 8,000 rupees, what is the generic will pass? It's like security deposit account debit to bank. The entry will be for the fourth point. The entry is security deposit account debit to bank. Money is moving out. My bank balance reduces. I'm giving credit. Security deposit, I'm giving a debit because it's an asset. It's a refundable amount. So what happens is this 8,000 is a refundable amount. Hence, this payment of 8,000 will not be called as a either as a revenue or as a capital. It's neither of these two. So first of all, it's not an expenditure itself. So it will not come into this classification. So how we have to give the answer for this question? Maybe you can look at the answer key, how they have presented. Money deposited with MTNL for installation of telephone in office is not an expenditure. This is treated as an asset because why? Because we'll get back this amount when we surrender the telephone on a future date. What happens? The security deposit will be refunded back to us. So this is treated as an asset, and the same is adjusted over a period of time against actual telephone bills. They're saying that we will adjust this amount against the telephone bills, but what happens is actually once you surrender the landline, what will happen? The MTNL will refund us back this fees of 8,000. So that's what will happen actually. But they're given that we'll be adjusting this amount in our against our subsequent month's telephone bill. But that's not the actual case. Anyway, the point is this is not an expenditure, it's an asset. If you're able to classify that, it's more than sufficient. Now, fifth question. A factory shed was constructed at a cost of 1 lakh. So we have constructed a factory for 1 lakh. A sum of 5,000 has been incurred in the construction of temporary heads for storing building material. So same story like the previous question, illustration one we have seen. No, I am purchasing a not purchasing, constructing. I am constructing a factory shed for 1 lakh rupees for which I have to store the materials. No, so what happens? I'm constructing a small hut, right? What is the question here? A factory shed was constructed at cost of 1 lakh. A sum of 5,000 has been incurred in construction of temporary heads. Yeah. So I'm spending 5,000 rupees for constructing a small heads for storing the building material. So what happens? For bringing the asset to a usable condition, I need to have this hut. Without this, where can I store the material? I can't keep it on the roadside. So what happens? This 5,000 will help us to bring the asset to a usable condition. Hence, this will be called as a capital expenditure. That's our answer. It's a quite straightforward one. Now, I've got some idea with this. Now, let's look at the second part. The second part is we're going to focus on capital receipts versus revenue receipts. Is there any other examples here before moving to next one? Okay, there's one more example here. Let's focus on this one also. What is the question here? Best Tech Solutions buys and sells computer as part of its business. So the business is to buying and selling of computers. It purchased 20 computers for resale to its customer. So I purchased 20 computers for selling it to my customers. Cost of each computer is 20,000. It also purchased a computer costing 24,000 for its accountant to be able to maintain the accounting records and printing of invoices. So besides selling the computers, I have purchased one more computer for my usage. For whom? For the accountant. For accountant to make the invoices, keep the accounting records, I have purchased one more computer. Suggest whether the above transactions qualify as capital expenditure or revenue expenditure. Very simple one. The first expenditure is there. No, we have purchased 20 computers. Each cost is 20,000. Now, what is the purpose of this computer? This 20 computer intention is to resell it. My intention is to sell this computers to our customers. So what happens is this purchase of 20,000 20 computers or 20,000 each will be called as a revenue expenditure. And what about this computer? The computer is purchased for accountant to be able to maintain the accounting records and printing of invoices. So for running the business, I need an accountant. For him to function properly, he need an asset. So this 24,000 purchasing of a computer will be called as a capital expenditure, because without this he can't function properly. Without accountant, I will be able to run my business. I have to file the income taxes, I need to know the accounting profits, I should know all these profits losses, right? So for which I need the help of an accountant. For the accountant to function, we need this support. For accountant to function, we need this computer. So this 24,000 computer will be a capital expenditure. So this is a capital expenditure, and this is a this 20,000 20 computers we have purchased. No, this will be a revenue expenditure. So that is the answer. Now we'll focus on the next one, which is the capital reserves versus revenue reserves. Quite easy one. Just like the way we had a distinction for expenditure part, we are going to focus on the receipt part. So what are these capital and revenue reserves? Let's focus on one by one. Revenue reserves. So what is revenue reserves? It is all those receipts which are earned from the normal course of operation will be called as revenue reserves. For example, sale of goods or services will be coming under as revenue receipts. So these revenue receipts will be booked in P&L. So look at these points here, and it will be of recurring nature as well. Recurring in nature, that is earned from normal course of business operation. This revenue receipts will be credited to P&L account, because P&L credit side we book the income and gain. Since being an income will be taken to credit side of P&L account. No impact in the balance sheet. So revenue receipts will not have any impact on the balance sheet part. That is on the assets or liability. It will not have any impact. Example, sale of goods, services, etc. All these things will come under revenue receipts. So very simple one. Recurring nature receipts will be revenue receipts. This revenue receipts will be taken to P&L and it will not affect your balance sheet position. Over. Now let's focus on capital receipts. Quite easy. What are capital receipts? All those receipts which are not of recurring nature. Look at this point. Non-recurring in nature. I'll give you some example for capital receipts. For example, let's say I am going to sell a building. If I sell a building, I will receive money. No, this receipt is a capital receipt, because daily I will not be selling a building unless you are into real estate. For other business, take ourselves, we are running a coaching services. So for us, if you're going to sell our building now, we'll get money here. This type of receipt will be a capital receipt for us. For the same building, if it has been sold by a real estate company, then it will be called as a revenue expenditure, revenue receipts. Because for them, this is their main business. It's a recurring nature for them. Daily, on a frequent basis, what they will do, they'll construct some flats, they will sell it off, they make money out of it. Again, they will construct another flat, they'll sell it off, they'll make money out of it. So, for classifying between revenue and capital, we should know the nature of the business. I would have given this point here. Nature of business plays a vital role in classifying revenue versus capital expenditure and receipts. So, to classify whether it's a revenue or capital, be it expenditure or receipt, as the case may be, first you should know the nature of business. Generally, when we speak of sale of building, we presume that we are not talking about real estate company. So we're talking about other business. So what happens for them? Selling of building will be classified under what as a capital receipts. So it's a non-recurring in nature. It would happen in the normal course of business. Then second point is source generated from balance sheet. So this receipt will be coming from balance sheet. So what happens is there are two possibilities. One thing is the asset will reduce whenever there's a capital receipt. the asset might come down. For example, selling of machinery. When I sell a machinery, I receive money. So this receipt is a capital receipt. Asset reduces, right? Similarly, the liabilities might go up. So for example, when I take a loan, what happens? There is an inflow of cash here. This receipt is a capital receipt. Example, sale of building, pricing of loan, etc. All these things will be called as a capital receipts. Now let's look at some examples now based on these concepts. Uh, let's take up this question. Illustration number 4. State with reasons whether the below items relating to the business of AB Limited are capital or revenue reserves. So we have to classify between capital or revenue reserves for these following points. What is the first question here? A machine with a book value of 10 lakh is sold for 12 lakh. So what I've done, I'm having a machinery with a value of 10 lakh. I'm selling it for 12 lakhs. Now is the capital or revenue? So I think whether selling of machinery is our business, basic presumption is no. So because uh, generally selling of goods is given to you instead of machinery. If something goods is given to us, if you're going to sell the goods, goods are what? Those are our finished products. So if you're going to sell the goods now, that is of recurring nature. Selling of goods will be taken as a revenue receipts. But here I'm selling a what? Machinery. So selling of machine will be taken as a capital receipt because machine will be there in balance sheet. The asset reduces for me and I'm receiving money here. So this is a case of capital receipt. Next one, premium paid, premium amounting to 1 lakh received on issue of shares. What is the meaning here? I'm issuing shares. Why do I issue shares? To raise finance for the company. I need funding. So I'm issuing shares and raising money from the public. We call them as shareholders, no? So I'm issuing the shares of my company and I'm raising money from the public for my company's financing purpose. Now, what I have done when I'm issuing the shares were issued at a premium amounting to 1 lakh received. So I'm issuing the shares at a premium portion. What is a premium? When we have studied the issue of shares in our school level, we have come across this concept. Something called as a face value will be there. When the shares are issued more than the face value, we call it as a premium. So, just for example purpose, let's speak of Bharati Airtel. The Airtel SIM we are using now, the Airtel company's face value is 5 rupees only. But as of today, 18th December 2025, the share price is somewhat around 2000 rupees. So 5 rupees share is trading at 2000 rupees. So what happens? There is a 1995 rupees premium for this share. So that's what we call it as premium. Premium means the share has been issued at a price above its face value. So this premium is a recurring or non-recurring. If you think in that way, it's very easy to classify. So this premium portion, daily I will not be issuing the shares. Only when the company requires funds, we'll be issuing the shares. So this premium of 1 lakh will be called as a capital receipts. Very simple one. Revenue receipts are of recurring nature. Capital receipts are non-recurring nature. Simple definition. So since it's not a recurring transaction, what happens? This 1 lakh premium will be called as a capital receipts. Next one, an amount of 20,000 received from goods sold in cash. What they're saying here, we are receiving 20,000 rupees for sale of goods. This is a keyword, goods. So goods is what we are dealing on day-to-day basis. So I'm selling this goods and I'm making money out of it. So this 20,000 will be called as what? It's a revenue receipts because it's a recurring transaction. Daily or on a frequent basis, I'll be selling my inventory and making money out of it. So since this goods is given to us, this will be taken as a revenue receipt. Suppose instead of goods, let's say they're giving it as a furniture, then what we will do? It will be taken as a capital receipt then. It's not a revenue receipt, it's a capital receipt. When if it's given as something like furniture, machine and all. In this case, since goods is given to us, this will be a case of revenue receipts. Then fourth point, an amount of 5 lakh received on the maturity of fixed deposit from bank. Also, an interest of 40,000 was received in addition to the maturity amount of the fixed deposit. So there are two receipts here. One receipt is 5 lakh received from maturity of FD. So I have some FD which has been matured. What is meaning of matured? The FD has been closed off the bank has returned back the money. So this 5 lakhs capital revenue daily will not close a FD. I would have treated the FD some point of time before. Now the FD has matured now. This 5 lakhs will be called as a capital reserves because fixed as a deposit is a asset for me. I'm closing down the asset investment and I'm realizing the money from it. So closing of fixed deposits will be called as a capital reserve. And there's one more component here also. An interest of 40,000 was received. So interest is what? Interest is on a frequent basis. I'll be getting the interest generally monthly once or quarterly once or yearly once with some period. So interest is a revenue receipt because interest will be receiving continuously, on a frequency basis. As long as fixed deposit is there, I'll be getting the interest month on month or a year after year or 6 months once, as the case may be. So interest is a recurring transaction. So what happens? Interest is a revenue receipt. Closure of fixed deposit is a capital receipt. So one is capital here, the other one is revenue. That's it. Let's look at some more examples. Illustration number 5. Good Pictures Limited constructs a cinema hall and incurs the following expenditure during the first year ending 31st of March 22. So the business is what? They're constructing, their business is to construct the cinema house. That's a business. Now tell me, they're constructing a cinema house here and uh, you are incurring the following expenditures has been incurred. First one is what? Second hand furniture worth 9,000 was purchased. So we have purchased some furniture. Second hand furniture has been purchased. Repainting of furniture cost 1,000. So we're going to focus on the expenditure part now. Expenditure now, how you have to think? First, think whether it's a capital expenditure or not. If it's not a capital expenditure, then it obviously has to be a revenue expenditure. To be classified as a capital expenditure, what is the condition? Capital expenditure, there are two conditions. What are those? The first one is should give us some long-term benefit should be there. So some long-term benefits are there now. We will classify it as a capital expenditure. If there is no long-term benefits, then what we will do, we will classify it as a second condition is what? Second condition is long-term benefit is the first point. Second condition is to bring the asset to usable condition. So if either of these two conditions are fulfilled, we'll be classifying it as a capital expenditure. If none of them are fulfilled now, we'll be classifying it as a revenue expenditure. So now coming back here, I am purchasing a second-hand furniture. It's a key point. So for the second-hand furniture, what I'm doing, I'm going for a repainting. So without this repainting cost, will we be able to use the furniture? Answer is obviously no. So what happens? This will be taken as a capital expenditure. So the 10,000, this 9,000 rupees is there. No, this 9,000 rupees will be taken as a capital expenditure. Then, okay, second furniture is 9,000 rupees. Okay, the furniture costs 9,000. Then repainting furniture is 1,000 rupees. Okay, so 9,000 is a capital expenditure. This 1,000 is a capital expenditure because without this repainting, I won't be able to use the asset. So 9,000 plus 1,000, 10,000 is a capital expenditure. Now come to the next point as well. The furniture was installed by own workmen. Wages for this being 200. So I am installing this furniture. Installation cost is a capital revenue. Without installation, you won't be able to use the asset. The installation cost has to be capitalized. So what you should do? 9,000 will be capitalized, 1,000 will be capitalized, and this 200 will also be capitalized. So everything put together, 10,200 will be capitalized with the asset. So all the three are capital expenditure here. Next one, expenses in connection with obtaining a license for running the cinema worth 20,000. So what they're saying, expenses in connection with obtaining a license. So I'm spending 20,000 for taking out a license. This 20,000 rupees, during the course of the year, the cinema company was fined 1,000 for contravening the rules. So I have paid 20,000 for getting a license, as well as in the current year, I have been fined 1,000 rupees for some contravention. And renewal fees 2,000 for next year is also paid. So what is the answer here? The first expenditure is 20,000. For obtaining a license, 20,000 will be what will be called as a capital expenditure because without this license, I will not be able to use the asset. So 20,000 will be a capital expenditure. Second one, I have been fined 1,000 for contravening some rules. So I have, for some contravention, I have paid 1,000 rupees as fine. Thousands is what? It's purely a loss for the business. So loss will be taken to P&L. This will be taken as a revenue expenditure. It can't be capitalized. Okay, so 1,000 is a loss for the current year. It has to be charged to P&L. And next one, 2,000 rupees. Uh, it's a renewal fee I have paid for subsequent year. Now, what is this? This 2,000 is for subsequent years for which I have paid right now. I'll be calling it as a prepaid expenditure. So this 2,000 is a prepaid expenditure of the current year. Prepaid expenditure will be shown in which place? It will be shown in the balance sheet. Even though this is a renewal fee, which will be paid yearly, it's a recurring transaction only, but this 2,000 pertains to next year. So first is a revenue expenditure or capital expenditure. 2,000 is a revenue expenditure only. But right now in this financial year, I'll be showing it in balance sheet. In next year, I'll be charging it to P&L. So 2,000, so the summary is 2,000 rupees is a revenue expenditure, but it pertains to subsequent period. Hence, for the current year, for time being, it will be shown as a prepaid expenditure in balance sheet. That's it. So the final answer is it's a revenue expenditure only, but for current year, we will be showing it in balance sheet as a prepaid expenditure. That's why you have to classify it. By nature, it's a revenue expenditure only. Next one. Fire insurance 1,000 was paid on 1st October 21 for 1 year. So I am paying some fire insurance. Fire insurance are what? All these insurances is going to be of revenue nature because year after year the insurance has to be taken. So fire insurance is going to be a revenue expenditure. Easy point. Next one. Temporary huts were constructed, costing 1,200. They were necessary for the construction of the cinema. Already seen this point before itself. They were demolished when the cinema was ready. So without this huts, I will not be able to construct the cinema hall. So for getting that benefit, I have to incur this expenditure. So what is this? This will be a capital expenditure. It's a very easy question. It's given multiple times. It's just a repetition only. So that's it. We'll look at one more example. State with reasons. How would you classify the following items of expenditure? Overhauling expenses of 25,000 for the engine of major for motor car to get better fuel efficiency. The key point is better fuel efficiency. So you have done some overhauling for engine of motor haul for a motor car. By doing this expenditure, what happens? We're getting some benefit is there. What happens is fuel efficiency has increased now. So this overall cost will be called as a capital expenditure because I'm getting some benefits now. This is a capital expenditure. Next one, inauguration expenses of 25 lakhs incurred on opening of new manufacturing unit in an existing business. So what they're saying here, inauguration expenses 25 lakhs incurred for opening a new manufacturing unit. So I'm spending 25 lakhs for inauguration purpose. Already seen initially, inauguration cost will be treated as a revenue expenditure. What is the reason? Because I don't get any benefit out of it. In future, there's no future economic benefit is not there, nor it doesn't help us to bring the asset to a usable condition. Since these two conditions are not fulfilled, inauguration expenditure will be expensed off in P&L. Next one, compensation of 2.5 crores paid to workers who opted for voluntary retirement. So I have paid 2.5 crores who opted for voluntary retirement. So they wanted to voluntarily leave the firm, for which I am paying them 2.5. We call this as VRS. So something called as VRS. VRS is nothing but voluntary retirement from service. So when the employees take VRS, we'll pay them some compensation. This 2.5 crores paid to the workers for VRS is a capital revenue. So the answer is 2.5 lakhs payment, 2.5 crores or crores. The payment for VRS is going to be a revenue expenditure only because when the employees leave the firm, I'll be settling them. That's it, over. They're going out, I'm paying them, it's completed, done. So this will be taken as a revenue expenditure. There's no scope for capitalizing it. Having said this, if you look at the answer key for this question, the amount paid to workers on voluntary retirement is a nature of revenue expenditure. That is fine. Look at this point. Since the magnitude of the amount of expenditure is very high, they're saying that since the magnitude of the amount is very high, it may be better to defer it over future years. This point is not generally acceptable. Just because the quantum is high doesn't mean that you have the right to book it in the balance sheet. That's not the case. Whether the amount is large or small, it is irrelevant. For capitalizing some conditions should be fulfilled. So in this case, this cannot be taken to balance sheet or you can't defer it into subsequent period. The entire amount has to be shown in the current year only. So generally, this section is not preferable. I was just don't take up this point. It's not preferable. So okay, when employees leave the firm, I have to settle them. The settlement is a revenue expenditure. It's they are going out. I'm paying them. It's done. I'm not getting any future benefit. Is not there. Nor doesn't help us to bring the asset to a usable condition. So there is none of these points are fulfilled. So what happens? This will be taken as a revenue expenditure. That's a justification we have to give. Just because the amount is high, it doesn't mean that you have the right to go for a deferral. I don't know why they have given this point. It's preferable not to give this point in the examination. Now we'll go for some more examples. Next question. Illustration number 7. Classify the following expenditure and receipts as a capital or revenue. 10,000 spent on traveling expenses of directors or trips abroad for what? Not for recreation. For what? Purchase of capital assets. To purchasing some asset for which the directors are going abroad. So without this expenditure, you won't be able to bring the asset to our place and we can't use it. So this 10,000 will be taken as a capital expenditure. Next one. Amount received from trade receivables during a year. We are receiving money from trade receivables on whom they are customers. Customers are paying us some money. It's a normal course of operation. On a day-to-day basis, I'll be selling goods to someone, I'll be receiving money goods from someone, and I'll be receiving money back from the customers from someone. So receipt of money from customers and all is a revenue receipt. Next one. Amount spent on demolition of building to construct bigger building on the same site. So I'm demolishing my old building and I'm constructing a newer building now. So for bringing the asset to a usable condition, which asset? The new asset to a usable condition, I have to demolish my old building. So this demolition cost will be a capital expenditure. Then insurance claim received on account of machinery damaged by fire. So there is a claim received from account of machine damaged by fire. On a day-to-day basis, the machine will not be caught by fire. So this is a receipt. It's not a recurring transaction. It's sometimes once in a while transaction only. So this will be taken as a capital receipts. So quite easy one. Next one, illustration number 8. Are the following expenditures capital in nature? So you have to classify between whether it's a capital or revenue. So let's start now. ABC run a restaurant. They renovate some of the old cabins. Because of this renovation, some space was made free and number of cabins was increased from 10 to 30. The total expenditure was 20,000. So what they are saying here, because of this renovation, what happened? The number of cabins increased from 10 to 30. This is a very, very key point. So by incurring this expenditure, what happens? We're getting some benefits, no? From instead of 10 cabins, now we are getting some 13 cabins now. So this extra benefit we are getting here. So what happens? This expenditure will be taken as a capital expenditure. Generally, by default, renovation renovation will be taken as a capital expenditure only. That's a default thesis. So whenever we renovate something, the renovation is done only to enhance the capacity of the asset. So renovation by default will be a capital expenditure. This point is even more conclusive. No, the cabin is getting increased from 10 units to 13 units. So what happens? That benefit we're getting here, hence it's a capital expenditure. Next one. New Delhi Financing Company sold certain goods on installment payment basis. 5 customers did not pay installments. To recover such outstanding installments, the firm spent 10,000 on account of legal expenses. So in this, what happens? I'm spending 10,000 rupees. No problem. So I am spending 10,000 rupees for what? To recover money from my customers. So for recovering money from customers, I'm spending 10,000 rupees. This 10,000 rupees legal expenditure is a capital revenue on a same story. For capital expenditure, 2 points are there. What are the 2 points? Benefit should be there. Some future economic benefit should be there for the enterprises. Second condition is to help the asset to bring to a usable condition. None of these conditions are getting fulfilled because of this expenditure. What I'm doing, only I sold the goods, I have to get back the money from the customer. That's it. So there's no future benefits and all. There's no expansion of the business and all. So what happens? This 10,000 fees will be taken as a revenue expenditure. It's not a capital expenditure. Easy one. And last one. Balav and Co. of Delhi purchased a machinery from Shah and Co. of Ahmedabad. Balav and Co. spent 40,000 for transportation of such machinery. So I purchased a machinery and I have to transport it to my place. So this transportation cost, without this transportation, will we be able to use the asset? Answer is no. So this transportation cost will be a capital expenditure. The year ending is 31st December 22. Year ending is irrelevant. Transportation cost incurred for machinery will be a capital expenditure. The reason is without this, I won't be able to use the asset. So that's it. Let's put an end to this discussion. So the cruxes for capital expenditure, the two basic conditions is what? One is the asset should be, we should be incurring this expenditure to bring the asset to a usable condition. The second condition is some economic benefit should be there. Some future benefit should flow to the enterprise. If none of these two are there, we can't call it as a capital expenditure. Okay, thank you.